Good morning. This is Vince Lanci. Welcome to the Gold Fix, where active metals traders get their daily requirements without the fluff. Um, as you can see, I'm broadcasting you from a non-sponsored, tremendous iPhone. But we're going to be speaking in this order. Today, we're going to be talking about yesterday's price action as a reference to yesterday's morning meeting, we'll call it. Um, Today's levels, we'll get to that first, right, earlier on. And then we'll go through top day events and some drivers and look at some charts. Okay. The current screen you're looking at is the opportunistic traders login screen. That is our benefactor, Lawrence Benedict, market wizard, manager of more money than I have. And certainly, at least in that picture, more handsome than me. Uh, I think he's a little humble. But that is the roadmap, which starts at 8 o'clock. And anyway, let's let's throw something up here that you can take a look at while we're talking. Right, this is the overnight recap. Put that up while we're talking. All right. Now, I'll be going to charts in a second. Yesterday, if you remember, we were talking about levels that one of the things that I said was gold is becoming a better market to actively trade. And by that, I mean intraday swings or levels that it honors more efficiently, as opposed to crude yesterday, which was not a good swing trading market. And by that, I mean either you were right or you were wrong. Um, uh, Gold gave us much respect on the numbers that we had, and more than one bite at the apple if you were wrong, which is not common in gold. People have asked me why I seem bullish in gold, or why am I a perpetual bull? I am not. My bias in trading, in swing trading, in active trading, is based on my options history. As an options trader, I traded in many markets and still do as a market maker. In oil, I was perpetually bearish. In gold, I was perpetually bullish. In stocks, bearish. In natural gas, bullish during the hurricane season, and bearish during the summer season. Now, the reason for that is, and I think if you get an idea why I give you that, you understand why I speak from a bull perspective. Those markets, I was always more excited about the movement in markets into the option skew, because there you had your fear and your panic. So, and you can see why in stocks when the market drops, if you're an options guy, you understand what I'm talking about. You had a put skew market, and that was basically producers, meaning people who are long stock in the situation, were dominating the market and buying puts, and the trading was better. You can make a mistake and you can make money. So gold has a call skew, not all the time, but it does currently, I believe. But gold is more, silver and gold are more exciting to trade on the upside. I really have no opinion directionally. I'm not Peter Schiff or some doom and gloom guy saying the end of the world is coming. Gold is going $5,000. You know what? If gold is going to $5,000, uh, uh, I don't think gold's going to help you if at the end of the world is coming. You're not going to walk into Katz's Deli. Those of you from New York know what I'm talking about. And you're not going to say, here's a gold coin. Give me, I guess they won't give you ham and cheese at Katz's. They're kosher. So give me a corned beef on rye. You're not going to do that. You're going to walk in with an AK-47 and you're going to say, give me a sandwich or die. So gold is not, the cure for end times. Gold is the cure for problems. So survivalists, I hear you. I know where you're coming from. Uh, Gold is not going to be your savior. Okay, so enough with the digression. All right. Yesterday we gave numbers of, if you remember, I'll put the chart up actually for that. If you remember, we were discussing we were discussing uh, 1194, right? So let's go here. Yesterday, if you see the two trend lines that I put up yesterday or 2 days ago, uh, 1190, 1194, a break above that, which comes in uh, the beginning of yesterday, right? So last night or 2 nights ago, I said 1194 would be an area, and it coincided with a trend line that Michael Moore's product gave, and 1198 would be not a level to buy. It would be difficulty. Now, you don't see any reason for that here, but you do. If you remember, if you recall, there were three long candle wicks, and that is where the market rejected very early in the morning. I think 3 in the morning time frame, that area. So you had your breakout above 1194. People got long, right? It was a little bit of a bull trap. People got stopped out, and the market went down and traced to that trend line, which was kind of exciting because it held it. And the next time through 1198, well, it wasn't a problem. I didn't call it a triple top, but loosely using the axiom, it's not technically a triple top, but the expression triple tops are made to be broken has some validity to it. We won't get into that too much today, but the market. The best part about this yesterday is uh, the system that I use, a volatility-based system, said that in this hour you should have bought it. We did not. We were doing other things, but we have a long bias, which I'll get into in a second, and we have been long, as have been a client or two. A long bias, and this system, interestingly, above 1198, which was a Michael Moore technical number, coincided with my own system, which is a volatility-based system from my gamma hedging days, to be long. And sure enough, it worked quite well for most of the morning. Now I'm going to shrink this a little bit so you can get an idea here. Now, right about here, if you want to tape watch, the day gets right about here. You have a top, and if you're just looking at it as a chartist, you're saying, okay, that's a top. Maybe this is a bull flag. I don't know. But here's the deal. That's when London closed. So the market got hit after Europe went offline, and that will feed into something I'll talk about later. But it's kind of like, if you want to be very simplistic about it, uh, and this can invert as well. Buy Asia, sell America. Uh, People are buying frequently. We'll see the buying coming through Asia, which comes in through London as well, and then during U.S. Profits will be taken, or the market would be sold off as because of a lack of buying, or because someone's possibly spoofing it lower. But the market climbed up again as the day went on, and uh, pretty much at 2 o'clock, 2:30, the market starts to trend sideways. So last night you had a little bit of a bounce higher, and now here we are in a situation that I think is good, really good if you're an active trader. So I think you really want to pay attention to this. Whether you fade the numbers or whether you go with the numbers is entirely up to you. As uh, uh, natural gas guru Bryn Kelly says on her Twitter page, I give the information, you decide. Now, I decide as well, but I decide for me. You decide for yourself. So let's go through today's numbers in light of yesterday's action. All right, today, in the first hour of trading, and that's between 7:30 and 8:30, 7:30 and 9 o'clock, I believe 1205, based on, if you want to use the Bollinger Bands as some sort of indication of my own system, between 1205 and 1208 is kind of a dead zone. Before, you've heard me say 1205, 1208 is, these are areas of resistance support, but now we're in there and we're working it. We're a little above 1205, but we are working it. So technically, it looks at it. If you look at the numbers, it's really 1206 to 1211. but I'm going to say 1205 to 1208 are what the inside range is. So right about now, if you're day trading or actively trading this, you should be, well, you, when I say you, that's the royal you, like the royal we, we are not amused. You should be, if you were me, you would be saying, uh, I don't want to do anything. I want the market to tell me what to do next. Now, from my perspective, if the market, I don't trade the first hour normally. The first hour, 1205 to 1208, I'm not really that excited about it. A breakout, because I'm a momentum trader. I'll trade strength into strength. I'll sell weakness into weakness. That's typically my style. You can use my numbers to fade the market and trade the range as well, but they're good numbers. And they're good numbers because they come from multiple disciplines. And by that, I mean a technician, cash flows that I see from traders in the market who give me information, as well as my own volatility system. And I use three different disciplines to corroborate or contradict my own information. I suggest everyone do that. If you're bullish, find a person who's perpetually bearish and go have an argument with them. That's kind of what I do. So back to the actual math here. All right. So quickly, yesterday, in reference to today, 1194, 1198 were numbers yesterday, as you can see on the chart where the trend line came in. And 1205 to 1208 were levels yesterday for me. I actually, to consider if you wanted to take profits if you were long. And then you'll hear me say frequently, gold hates the teens. No, not my idea, but one I certainly will patent, as long as the person who quoted that to me is not listening. I think he is. Uh, he's a fund manager who has an unorthodox but absolutely genuine way of analyzing markets. But let's go through this. Okay, so today, 1205, 1208 is dead zone. Is a dead zone in the first hour, as I said. For me, on my system, above 1212 is bullish on an hourly close. So if we get above 1212 and settle there on the hour, if you'll see this, so it's a 16.41, 0.40 on my screen. That's the hour counting down on the gold December hourly chart. So if we're above, say 2 hours from now, 1212 at the close, I will want to buy it. Now, if we're at 1220, am I going to buy it? No. So there's levels of risk reward that we're not discussing that I'm not giving away. You'd have to pay me for that. On the downside, okay, I would be concerned, but not as bearish as normal, below 1206, 1205. Now, that number is not known to me yet, because an hour from now, I have a feeling that this bottom yellow line on my Bollinger Bands, which are only part of the system, are going to be a little bit lower. Okay, so the key is this. This is me today. I'm doing nothing for the first hour. After the first hour, if we're above 1211 and my trigger goes off, what are we going to do? We're going to buy it and we're going to put a stop in, and that stop in is going to be, that stop out is going to be not arbitrary, but it's going to be very, very reasonably tight for swing traders, and that's because I want more than one bite at the apple. Typically, when the system that I use, volatility-based system, is wrong directionally, it is right the other way. So I want to be in, wrong, out, and reverse, as it happens frequently. So the cool thing about the upside, which we'll discuss first, is gold hates the teens. Okay. People have asked me, does that mean you don't think it gets into the teens? The answer is no. It means that gold hates the teens means it repels it, kind of like an option strike with a lot of negative gamma floating around it. So if we get into the teens, if you want to use 1215 as your midpoint, anything below 1215, it will reject lower. Anything above 1215, to simplify it, it will skate through. We have been up into the teens testing this area so many times, and I'll just tighten this up. Okay. If you look at the times going back to here and here, We've been in the teens and gotten rejected, in the teens and rejected it, in the teens and rejected it, And then how many times have we not even gotten into the teens, below the teens? No way. No. And yesterday, again, touching the teens, no way. I don't think they're going to stop the market from rallying this time. I think above 12.13, there are other numbers. But if I were to get long above 12.12 in an hour and a half, I would look for 12.21. I would look for us to get out of the teens. Gold hates the teens. That doesn't mean it can't reject it again. I have my stop in if we get rally, and I'm looking for more upside than normal. Normally, I'll risk one to make two. So my win loss ratio on number of trades is usually about 50-50 if I'm doing it right. And if I win, I make two, and if I lose, I lose one. The asymmetry in my trading style is tied to the uh, it has a deadline. So I believe that there's a momentum bias in one direction that will fade in 3 hours. So that's how I look at it. Some people have asymmetry. They believe in flows, so they may risk one to make one constantly, which you say, well, that's not really good risk reward, but it is if you understand your asymmetry. I'm risking one to make one, but I think the probability of the one that I'm risking is a lot lower than the probability of the one that I'm making. I'm saying the probability of directional movement is always 50-50 in the system, but when it does move, and the asymmetry is going to move quickly. So I'm dragging on. I have to get a little bit tighter than usual than I have been. So let's just go with this. So the upside above 12.12. I'm looking to trail a stop and looking for 12.21. Above that, any guess on numbers is up to you. There are plenty of them. I'm not going to get into that. Downside. Okay, downside is actually equally scary if we do fail. If we go in after the first hour below, say 12.05, that's just a zone. That's not actually a number. It's going to be like 12.05. We could have a sell off as low as 11.97 and still have your bull situation intact. But so if we go below 12.05 after the first hour, I would be seriously considering shorting the market and looking for. I'll give you a stop on that one. I would say 12.08 would be my stop level. And so if I'm shorting at 12.05, we're risking three. I will be looking to make six. So 12.05 minus six, 11.99. So that comes in those levels as well as I have. Below that, you have to look at the trend line. The key as we start to get outside ranges, if we do get them, is for me, if you get below 11.89, Michael Moore says 11.85, I believe. If you get below 11.89, I think we've got some serious trouble. And that's before I drew this trend line. That's based on volatility indicators. So today's levels, 12.05 to 12.08 is a dead zone for the first hour. Above 12.12, I am bullish. You may want to fade it and sell in the 12.11, 12.12 area. Below 11, below 12.05, I believe there's opportunity for a downside trade to 11.97. Below 11.97, I would look for 11.89. Below that, I would look for the 11.70s. But the upside trade for me is very simple. I'm looking for it to get above 12.12 after the first hour and get long and hold it, hopefully, till 12.20, 12.21 area. Okay. Hope that explains it. What I do want to go through today a little bit is why did gold rally yesterday? The dollar was mixed. It was actually strong. It was weakest against the dollar yen, and I think that's worth looking at if you're a person who looks at correlations and drivers. We only have 5 minutes left, so we're going to go through this very quickly. I can definitely do a whole seminar on this. If it's not a cure for insomnia, we'll just look at it like this. All right. Yesterday, gold rallied, and the dollar was stronger. Here's the dollar's chart from yesterday. You can see, well, this is the hourly, so you can see today the dollar was stronger yesterday uh, for uh, here for the days that we're act for the time that we're active. It went up to 95 and then started to sell off in the afternoon. But basically it's in a range. But during the time that gold rallied, the dollar also rallied. Don't tell me that's because it's a flight to safety. Those headlines, flight to safety. No, that's not what's going on. Here's what's going on. Here's what's most likely what's going on. I noticed that although the dollar was bullish, the dollar yen was the yen was lower, and by that I mean the yen was stronger. That was the currency I think that made the most sense yesterday. If you could see the yen in the run up, and on the second, it starts to really dive. And that's the only currency that really moves significantly that has a long history of positive correlation or inverted for this chart. So when on this chart, when the yen goes down, that's the dollar weakening. So why all of a sudden is gold rallying in my theory on the dollar yen move? And I don't know the answer to that. So but I'm not certainly going to ignore it. I'm going to trade on that until I see something different. Now, other currencies had moves as well, but the dollar yen was most significant. Which brings me to China. Golden Week. Nice headline. China has 2 weeks a year where they basically shut down the government, and people speculate that China will buy gold before the holiday or buy gold after the holiday. But the PBOC basically shuts down. Now, if you look at this, this is the yuan uh, uh, onshore. Okay, so this would be or also known as the renminbi. All right, so the the Chinese currency that trades onshore is the one I just showed you. The Chinese currency that trades offshore, and this is part of their problem, they have two floats, so to speak, is here. Now, yesterday, when if you look at this here, it had a very nice spike higher and then worked lower the rest of the day. What I want to get to is a little graphic that I have. Um, that people don't know what they're talking about, but they certainly are right when they talk about something is going on there. And let's go. So this is the post that the opportunistic trader that the Lanci Gold Weekly that was on the opportunistic trader. It was also picked up by Zero Hedge. Uh, that was on the 30th. All right, so there's the trade. All right. Here's what I want to get at. There is a gentleman. I think his name is Brady. He's a CFA and a gold guy, and this is part of a post he put up. And addition, and this is it's not clear from this, so I'm going to elaborate. Additionally, and this is very important. If price rally during golden week, you can read it yourself. But basically, what he's saying is that, uh, as I would say, gold moves during golden week. Some people say it gets bought, some people say it doesn't get bought, it gets sold, but it moves and people can fit their narrative to whatever they want. But what he's saying is if China is not active in the gold market right now, then uh, then and it's rallying, then be aware that they could be selling it, although I don't see that in the week after they come off of it. All right, so here's what I had written about this a year and a half ago. This is why I believe there's a tie here. In fact, what he says here is that oil and the yuan and gold are now more linked than ever. Now, I don't mean that in a typical price way. We're at 754 time. Let's go like this. Okay. If China is backing its currency, there you go. That's my warning. If China is backing its currency indirectly or de facto with gold, as I believe they are right now, it's in the post. It's in several posts. Uh, what'll happen is they will be buyers of gold and sellers of gold as market makers to keep it in plug in a range with the yuan. So the PBOC was off yesterday, yet there was a lot of buying of gold during London hours, and I think that was coming out of Asia. There's a lot we can get into there, but I'm just touching on the concept. Bear in mind, gold and the yuan are increasingly tied, and it's almost like there's a peg to gold right now. All right, next thing. There's the weekly report as put on Zero Hedge. All right, this is Mark Chandler. Mark Chandler, we're proud to on board, I think is the word. He does not work for the opportunistic trader. He is an experienced macro economist, Brown Brothers Harriman, and I had a brief email conversation with him yesterday, and we are happy uh, uh, to have asked, and he has accepted uh, uh, to write to write on his own blog, but publish his stuff for everyone to read. I think it's fascinating, especially if you're a gold person looking to understand more about dollar pairs. So, thank you to Mark Chandler. I suggest people find his website and connect it. I think it's called Mark to Market. But you could see it. Buy his book if you want, but that's not the point of the broadcast. Okay, Michael Moore. All right, here's Michael Moore today. All right, I've highlighted what we can talk about. Decent trade above 12.11 will project. Just take a screenshot if you have to. Okay, buy against 11.99. He puts down there and near the bottom. Uh, yeah, okay, but 11.97 is my problem. So buy against 11.99 with a tight stop. If you look at his numbers where they coincide with mine, 12.05 is the number for him below, 11.97. Above is 12.12 and 12.22.30. The numbers in the middle, those are minor numbers in my opinion. But I would basically say that the gold market, we're running out of time. I'm being told by Michael, and here's what we're going to get. Here's what we're going to finish with. We're not going to finish with that. We're just going to go right back to the chart. All right, silver. Here we go, guys. Silver leads right now in a sustained bull rally. So if you're bullish, gold, buy silver. If you have a uh, strong heart, buy silver, I should say. But right now, silver and copper and gold are all moving in the same direction. To me, that's unimpeachable information that China is involved. So finishing with gold. All right, gold's a little bit softer right now. I'd be buying dips in gold, and I would be selling rallies below the teens and buying rallies above 21. That's it for today. You can find me in the chat room, and you can find me in the chat room along with uh, Tracy, Bryn Kelly, Larry Benedict, the godfather of the show, and S&P stock trading extraordinaire, and he'll be starting his broadcast at 8 o'clock. We hope to be taking questions next week, and that's pretty much it. I hope everyone is having a great day. Oh, and also a shout out to Tom McEntee for his option expertise. We really appreciate that. He helped us yesterday. Have a great day, everyone. Arrivederci.